Hey everyone, welcome to the KE Report and a company update from Scorpio Gold. Chatting with Zayn Kalyan, the CEO of Scorpio Gold. Company is traded on the TSX Venture Exchange under the symbol SGN, on the OTCQB under the symbol SRCRF, and the Frankfurt Exchange RY9. Company is focused in Nevada. We'll talk about the Manhattan property as well as get an update also on the Mineral Ridge project. Last time we chatted with Zayn back in October of last year, we were talking about the consolidation of that Manhattan district. Also updated some drill results from last year and also talked about near-term potential at the Mineral Ridge property. Now we're following up because the company just closed a financing to give the company some working capital to move forward with their plans this year. So, Zayn, just have to ask, now that you have some cash in the bank from this financing, where are you going to allocate these funds?
Yeah, appreciate the time and thanks for having me back. Yeah, basically, we're pretty excited. Very happy to close the financing and have that behind us. I know last year we focused a lot on the narrative of small scale production at Mineral Ridge. And I think there's been an expectation in the market that we really delivered. That was where we were going to really take the company and leverage that cash flow to be able to invest in Manhattan. We took a lot of the better half of last year really to understand what the opportunity at Mineral Ridge looked like. And I'd say that we were in a little bit of a different market in that small scale production was kind of what the market was rewarding because having free cash flow in a market where capital is tight and companies are diluting at low levels, just having that cash flow is really the way to drive projects forward. I'd say that the market has evolved, obviously, with gold at north of $3,000 and kind of the excitement in the market. And that's really kind of changed a little bit, but it's also driven up, it also enabled us to really look at the economics of Mineral Ridge and come to the conclusion that the value proposition of investing somewhere between 5 and 10 million US in the capex slash opex requirement to generate something around 20 to $30 million over 3 to 4 years. And that's also like with a lot of risk and uncertainty and small all the caveats that come with small scale production, bonding requirements, etc. Um, we really did come to the conclusion that the value proposition of investing that same 5 million US in Manhattan and being able to realize, call it 10x in value of as to where the company is today at a minimum was really the kind of the trade-off. So Mineral Ridge is a tough project. It's got a high strip ratio. To build the mill, it's a very high capex with even at $3,100 gold or $3,000 gold, it's still not a super big payback, and it's a long tail. It's like a 6 to 7 year payback on that. It just didn't really make sense for our investor base and our supporters that the value proposition of a company that's trading at, call it somewhere between 10 and $13 million valuation today, that has an asset that, when compared to other assets that have transacted in Nevada over the past 5 years, and you can see this on one of the slides in our deck that kind of shows the comparison of the value of Manhattan in terms of grade recovery, scale, and then scalability opportunity. It's in a league of its own in that respect. And based upon those metrics, it could be worth at least 10x what we're trading at today. And with a $5 million investment, we can continue to expand that and continue to grow that multiple. Whereas Mineral Ridge, you invest 5, 10 million, maybe more, and get a $30 million payback over 3 years. It just didn't really make a lot of sense. So what we've decided to do is sell Mineral Ridge. And we're currently entertaining offers from a number of parties. It's an active process as that's ongoing. And I'm hoping that in the next couple of weeks, we'll be able to provide a little bit more of a clear update on that. What I'd say is that it's not to say that Mineral Ridge is a bad project. It's just not the right fit for what Scorpio and its investor base really want to move forward with. And I would really say that that's based upon the fact of it is small scale production. And it's probably not really a fit for a public company. It's more of a fit for a private equity firm or just a private mining company that really wants to kind of generate that cash flow. Whereas what we believe, we really do believe we have the tiger with the tail at Manhattan, where we can realize a really significant upside and multiple on what Manhattan's currently trading at.
All right, well, let's dig in there then, Zane. Let's talk about Manhattan and the value proposition. So you've got the capital raise. You're going to be drilling. I believe you're going to also be coming out with an updated resource estimate. Talk to us about some of the focus of the drilling for this year, where you think the resource is going, and how you build the value at Manhattan.
Yeah, so I know the market has been waiting with a lot of anticipation for the resource. What I would say is that we did find a lot of additional data. We nearly doubled the size of the drilling database in December, and that was uncovering a lot of historical drilling data, over 1,200 additional holes on top of the 1,200 that we'd based our original baseline resource off of. So there has been a lot of QA/QC process in trying to understand exactly how much of this additional drilling we can use. But ultimately, we're feeling very confident that we're going to be able to deliver a significant resource with very, very competitive grade. So grade that really stacks up ahead of everyone else. And we're talking, call it in the 1.3 gram per ton range, and with very solid recovery. So we have the benefit of having over four distinct periods of production profiles at Manhattan, with the most recent metallurgy having been done by Kappas Cassidy in 2012. And having the modern network alongside actual production history and production network, like production records that allow us to understand exactly what the recoveries were, really does give us a lot of confidence that the ore is very amenable to cyanide, and that ultimately we do have something pretty good here in terms of we're going to be able to deliver very high recovery numbers, or very competitive recovery numbers is how I put it. So ultimately, at the end of the day, our goal is there's two core zones in the 1.8 meters or 1.8 kilometers of strike that we have, that we figure with, call it 6,500 meters of drilling this year minimum, we can build significant ounces. Beyond that, the land package, we've obviously grown the land package considerably, and that was with a lot of staking we did last year. And then we also have we have two past producing pits about 3 miles to the south of our 1.8 kilometer core zone that also have not really been included in the resource, and they haven't really been expanded. There was some drilling done there by Scorpio in 2021, and they got some pretty decent results. So ultimately, we believe that this is a district scale opportunity. Focusing on the core resource area this year, we believe we can add significant ounces. But then beyond that, there is the opportunity to really grow beyond that with a lot of, we'll call it more greenfield exploration and brownfield exploration zones that haven't really been included in this resource, but are all along that same strike length. And at the end of the day, what I really try to hammer home is this is district scale for a number of reasons, but the project does sit 10 miles to the south of Round Mountain on the same caldera structure. And Round Mountain is Kinross's largest mine, or second largest mine, largest mine in southern Nevada at 16 million ounces in historical production. The mine has significant processing capability, but it is on its last legs. It is kind of getting to the end of its mine life. The current stated mine life that Kinross has 2027. It does seem that they're going to expand that with some work they're doing with a decline and some underground work that they're going to do till 2029. But beyond that, Manhattan is pretty well positioned to be a part of kind of maybe the future of the Round Mountain project. And beyond that, Kinross already holds a 2% NSR on half of our ground as well. So we do feel that it's very strategically placed in that respect. But then beyond that, we're talking about district scale, same caldera structure. A lot of geologists are seeing a lot of the same geology, and we're pretty excited in that respect.
Hey, well, first things first, get that resource out, right? Then get drilling, then expand on the resource. Just considering, sounds like this resource is going to encompass just a whole lot of historic drilling. Do you have any insights on what you're going to be able to include on that resource? What sort of confirmation work you need to do on this large database of past drilling on this asset?
Yeah, so we've been working on over 30 terabytes of data that we accumulated over 6 months last year. So we started with a core database. We continued to build on that. And when I say we continue to build on that, it's literally uncovering boxes and boxes of historic data that had to be scanned, digitized, and then reanalyzed and reconfirmed. So we've spent a lot of time going through all of that process over the past, well, or call it 6 to 8 months. That whole QA/QC process we've come to a conclusion that we're very confident in probably about 1,200 holes at right now. Over the next couple of weeks, we're going to see how much more we can add from the additional database. And then beyond that, some of those holes, like I will say, like call it, that's probably about 150 holes are modern, like from 2021, 2022. So we do have modern drilling as well. And we did do drilling last year, and we're going to continue to drill again this year. And our goal is to probably drill a minimum of 7,000 meters this year, probably closer to 10,000 meters, assuming the sales with Mineral Ridge go the way that we anticipate.
Well, Zane, in addition to these historic holes that you're going to be bringing into the mineral resource and the drilling you did last year, you've also mapped out some 2025 regional exploration targets. A couple interesting ones to go after where maybe you can push the envelope of this deposit, Mariah, Black Mammoth, Round Rock, Keystone Jumbo. Maybe talk about some of this 2025 regional drilling you have on tap.
Yeah, so I would say of the drilling we intend to do this year, about 10%. We do, there's so much low-hanging fruit inside the core resource area to add ounces, so we are focused on that. But at the same time, we do believe that there is significant value in going after these regional targets, especially the ones that are on the northwest end of the core resource and the southeast end, that's being Keystone Jumbo on the southeast and Black Mammoth on the northwest, particularly because by focusing on by kind of realizing mineralization on either end of those things, we can show the continuity of strike, which then allows us to potentially paint this picture that the whole strike length is I'll call it set 6 kilometers is completely mineralized. So that's ultimately the goal. I would say that Keystone Jumbo is low-hanging fruit in that we have done modern drilling there. There's historic drilling. It is a past-producing pit, and we think that that's kind of an easy target. Black Mammoth is a particularly exciting target as well because it's never been tested, never been drilled, but it has. If you're standing outside the Goldwedge mill or the mill that we do have at Goldwedge, and you're looking at this big, call it little mountain, it's has tons of historic workings all on it. It's got multiple head frames, lots of adits. So obviously there was a lot of historic work that was historic mining that was done there, but it's never been tested from a drill perspective, and it sits right on that same Reliance fault. So we're pretty excited to put some holes in Black Mammoth as well.
What will the total budget be then? If it's between 7 to 10,000 meters of drilling, what do you think that budget will be? How much do you even need to get from that sale of Mineral Ridge?
Yeah, so 6,000 meters of drilling costs us about 2.5 million US. And that's all in. That's assays, all the support staff, everything. That's our kind of our baseline target. Now we do have you can see them on our financials. We do have some historic payables that were related to carrying costs at Mineral Ridge that we are still covering. But what I would say is that if we realize what we believe we can on Mineral Ridge, we're going to be able to easily drill 10,000 meters on top of the 6,000 minimum that we've budgeted for, and we're going to really continue to be able to build on that as well.
All right. Well, Zayn, you have outlined the work that you have in front of you here. Near-term news flow being a resource estimate, and then this drilling, and we'll see where that sale of Mineral Ridge leaves the company cash-wise too. If anybody has any follow-up questions for Zayn, please email us and click that link in the show notes to visit the Scorpio website to learn more about the company's project and follow along with news flow. Zayn, thank you for this update.
Thank you. Thanks, Corey.